Our exports increased by 54.9% from US dollars 4.2 billion approximately in the 12 months up to October 2022 to United States dollars 6.5 billion in the 12 months up to October 2023. So between that year, October 2022, October 2023, the exports grew from $4.2 billion to $6.5 billion, a leap of 54.9%, largely driven by gold, coffee, and maize exports. Imports grew by 26%, 26.2%, much slower than the growth in exports. Although our imports increased, but for them they increased at 26%. But the exports increased by 54% in the same period. Much slower than the growth in exports, resulting in the narrowing of the trade deficit by 11.2% in the same period. Because we still have a deficit globally, more import spending than export earning. We still earn less for exports than we spend on imports, but the gap has narrowed. The imports grew by 26%, but the exports grew by 54%. And this is just still mainly raw materials. If we start exporting finished goods now, this will this is the main reason why the Uganda shilling has remained stable. The Uganda shilling has remained stable, if you notice. It has remained stable, together with the strong foreign direct investment inflows and the remittances of Ugandans working outside the country. This shows that Uganda's economy remains attractive to investment, and it remains a profitable investment destination. Imports increased to US dollars 9 billion in the 12 months to October 2023 compared to 7.4 billion in the same period a year ago. That's what we were talking about. The imports also grew, but they grew less than the exports grew. The increase in imports is largely in the oil and gas sector, mineral exploration and development, vehicles and accessories. We are buying this machinery for the oil. We are acquiring that capacity to dig the oil out. Export receipts are expected to increase even further as Uganda accelerates the production of light manufactured goods and mid or high-tech industrial products through value addition, especially to the abundant mineral reserves the country has. To accelerate the process of value addition, the government is reducing further the cost of electricity for manufacturers, improving transport infrastructure, including roads and railways, eliminating bureaucracy in the government, especially in procurement, in order to attract new investments and technology transfer, making available affordable capital, and intensifying the fight against corruption through accelerating automation of government processes, frequent audits of government interventions, and rationalization of government institutions and departments. The fight against corruption is is not as difficult as people think. You will see in the coming days how we are going to cause a lot of casualties. Some few months ago, I hear that the Minister of Finance created a group to audit the employees, find out whether there are ghost employees. And within a short time, they have found a big number. Auditor General, I think the finance told Auditor General. Now, Auditor General, instead of giving the report to finance, went to Parliament. Now, this is not a political matter. So I'm going to write to CID to go for these people. Because this is not political. Committee of Parliament. Committee of Parliament is not CID. This is trying to divert now. So now you will see these people who are they are not clever. The money is coming from a known source. I have sent you money to pay 20 people. Each one is being paid so much. You go and you pay 25. You create artificial people. It's very easy to find out these artificial people. It's a matter of time. Therefore, fighting this corruption is not as difficult as people think. You report these corrupt people. You will see what will happen. They will give up. By the time we run out of space in Ruzira, people will have lost appetite for corruption. You keep tuned on this channel. The East African community, as a single trade bloc, remained the major destination of Uganda's exports in the 12 months to October 2023, accounting for 43.5% of total exports, followed by the Middle East, 18.1%, and Asia, 17.6%. Within the EAC region, the top 3 destinations for Uganda's exports in the same period were Kenya, 31.5%, Democratic Republic of Congo, 24.6%, and South Sudan, 23.3%. In the 12 months to October 2023, Uganda traded at a surplus worth US dollars 716 million with all the EAC partner states. So within the East African region, we have got a surplus of $716 million. However, the trade balance with Kenya and Tanzania was a deficit, meaning Uganda imported more in terms of value from those countries than exports to them. In the 12 months to October 2023, Uganda exported goods worth US dollars 890 million to Kenya. This is a big growth because in 1986-87, when we were having some issues with Museveni, Uganda was buying from Kenya goods worth $200 million that time. And Uganda was selling to Kenya goods worth $12 million. Now, we are talking of Uganda selling to Kenya $890 million. Then to DRC, we exported value 696 million and 659 million South Sudan. Then 298 million to Rwanda. Then to Tanzania, 213 million and 72 million to Burundi. In total, our exports to the EAC were worth US dollars 2.8 billion out of the total export of 6.5 billion to all our trading partners. However, this is a very tiny fraction of our exports compared to the global exports. These exports, when you put them global, our percentage share is 0. I don't know whether you can write this, whether it will 0.003. It is not even 0.01. No. Walanyo. So to accelerate our prosperity, we must significantly increase the volume and value of our exports to the global market. Through increased trade, our goal of transitioning from poverty to prosperity will be achieved much faster. In the same period, Uganda recorded a trade surplus with the European Union and COMESA of US dollars 113 million and US dollars 968 million. So, with the European Union, we exported more to them than they exported to us. And we had a surplus of 113 million with them. With COMESA, we're exporting to them more than we are buying from them. COMESA is the other bigger body. And the surplus is 967 million, respectively. Our exports to COMESA were worth 2,000. We are worth like 2.3 billion to make the Chivaro simpler. And to the Middle East, it was 1.2 billion. And Asia, 1.14 billion. And the European Union, 860 million. Trade deficits were recorded with Asia and the Middle East of 2.8 billion and 400 million respectively during the same period. So to the Middle East and Asia, they are still exporting more to us than we're exporting to them. But this will change because I know why. Government will soon finalize the strategy to expand Uganda's GDP 10 times. That's what I have told the finance people and the cabinet. The GDP of Uganda must be expanded 10 times from the current 50 billion financial year 2023-2024 to US dollars 500 billion within a decade, starting with the financial year 2024-2025, driven by the value addition and access to export markets. Countries that have exponentially grown their GDP to around US dollars 5 billion from a base like Uganda have demonstrated that the primary drivers of the accelerated growth were: one, access to global markets with higher rates of growth of manufactured exports and their share of world exports of manufactured goods leaping from 9% in 1965 to 21% in 1990. So this was one of the reasons. There are countries which were like us some 40 or 50 years ago who are now where we want to go, $500 billion. I will mention them later. The reason they did that, first of all, was to being able to export to Abagaga. Boguza Abagaga, when you sell to the rich, it is, you grow more. Because they buy. Abavu bagula katono. So when you are still producing only for the wavu, then you have, like for instance, me, a milk producer, the Ugandans are not buying enough of my milk because they still don't have money in their pocket. According to science, somebody should drink 210 liters of milk per year to keep the teeth in your mouth, make sure that the bones don't break. You need 210 liters of milk per year. But Ugandans, when we started, we were drinking only 18 liters per person per year. Katibasi Mvudeko, they have now improved a bit. They are at 60 liters. Now, if Ugandans were drinking 210 liters, this business of saying that we have got too much milk, we need to export it, will not arise. We would actually be having a shortage. So producing products for export to Abagaga, rich people, Jalonyo, is one stimulus for growth. Increased productivity across the strategic sectors. Specialization through skilled human capital that supported research and development which helped to achieve competitive advantages. Okuteka science, of course, science. Because what we are doing, what has been doing now is imwanyi, coffee, and suju, pumpkins. They don't need much science. Even my people in Ntungamo are growing. And the Ntungamo people don't have much, but they grow the banana, they grow what? So, okay, those help us. But we also need higher value products of science. They would earn us more. Even from those raw materials. Like from milk now, there is a protein called casein, which we are selling to all over the place. So science adds more value. Prudent economic policies that harness the comparative advantages, peace and security that supported political stability, among others. These countries, which were like us about 50, 60 years ago, are South Korea, 46 years of growth at an average growth rate of 13%, grew from 38 billion in 1977 to US dollars 1,665 billion in 2023. South Korea in 1977, one and a half times where it is now, compared to what South Korea was in 1977. But now you hear they are at 1.7 trillion dollars. They have jumped. Thailand, 38 years of growth at an average rate of 7.6%, from $38 billion 1985 to 500 billion in 2023. Malaysia, 34 years of growth at an average annual rate of 8%, from US dollar 35 billion in 38 billion in 1989 to US dollars 406 billion now. Singapore, 33 years of growth at an average growth rate of 8.7%, from US dollar 36 billion in 1990 to 466 billion in 2023. And Chile, 33 years of growth at an average rate of 4.5%, from $33 billion in 1990 to US dollars 316 billion in 2023. So it's really possible what I have told the government to do. And many of these countries don't have the resources, did not have the resources we have. If you look at South Korea, you look at Singapore, they don't have natural resources like we have. To expand regional trade and support regional development, Uganda is undertaking joint projects with the DRC and improve the border infrastructure to facilitate trade and financial services across the region. We are undertaking joint projects in the road sector and electricity to Eastern Congo. Securing this market is good for Uganda in terms of exports and jobs. Ugandans, in terms of the Uganda government and President Tshisekedi of DRC will continue to work together to improve the security situation in Eastern Congo. Uganda has gained competitiveness in recent years in a number of tradable goods, including animal products such as beef and milk, agricultural products, especially coffee, tea, fish, sugar, fresh and processed food, and industrial products such as cement, iron and steel products, light manufactured goods, etc. However, we continue to face non-tariff barriers to our exports, which are being resolved through our discussion with the leaders of the ESC and COMESA. If we did not have non-tariff barriers by some of our brothers and sisters, Uganda would be exporting much more. But this will be solved. This will be solved. I'm talking to all of them. It will be solved. Tourism inflows remained resilient, recording an increase of 9% from US dollars 978 million in financial year 2021-2022. This was the year of Corona. our earnings in tourism went down to $978 million from more than $1 billion. Tourism inflows remained resilient, recording an increase of 9% from US dollars 978 million in financial year 2021-2022 to US dollars 1.1 billion in financial year 2023.